Hello, everyone. Welcome to VRIC Media, your most trusted voice in metals and mining. I'm your host, Darrell Thomas, and today we had the pleasure of interviewing Andy Schectman of Miles Franklin Precious Metals. How you doing today, Andy?
Darrell, I'm great, my man. How about yourself? Happy New Year, first and foremost, to you, your family, everyone out there, and look forward to seeing you in a couple of weeks up in Vancouver.
Yes. The new year is it is happy for my portfolio. I would say, my wealth keeps growing as gold and silver are screaming higher. But it has me wondering about the old saying, like own gold and hope it doesn't go up, because there is a lot of chaos that is also happening around us as well. And just wanting to unpack some of this with you. And so, just curious on how this year, we recently had the Venezuela event as well as the Federal Reserve being investigated by the DOJ and such. And I'm just curious on how you're processing this, because gold and silver are screaming higher to start this year. And just curious what signals you're looking at.
To me, I am looking at, in terms of signals anyway, I am looking at a market that is seeing massive, and I mean massive, deliveries, Darrell, into COMEX. To me, first and foremost, above all else, that's really what matters, because what you are witnessing are the most well-informed traders in the world. Forget about the fact that we're seeing billions and billions and billions and billions come into the market, into COMEX, every single month. Which no one's talking about on the mainstream, which I just don't get. But the people at that level who have that kind of wealth, they're also connected to the information. They're not doing it just for the hell of it. These people are at the highest level of government, at the highest level of finance and of influence. And when we see what amounts to literally billions every single month coming in, to me, that signals not only that the metal itself is probably worth more than the money being used to purchase it, but it also signals to me that it is a physical delivery that is, I guess you could say, there's a fight going on over real delivery demand over paper promises. And I'll give you an example of what I mean. Now, this is what I'm about to tell you is true of everything we've seen every month since a year ago, November, when Trump won the election. But in the month of December, there was 3,706,000 ounces of gold delivered on COMEX. Well, 3,706,000 times, at the time, $4,300 an ounce. Do the math. You're at, $13-14 billion. And how about the 64,730,000 troy ounces of silver stopped and issued and stopped? That's the same thing as delivered. What's 65 million ounces of silver worth at $80 an ounce? And if a mint box of silver maples or eagles weighs 42 pounds, what does 65 million ounces weigh? And at this level, it's not even the money, Darrell, as much as it is the information that is pushing these people to do it. Now, this has gone on again. Here we are in January, and we've seen roughly 6 or 7 days on the delivery month, which is not a major scheduled delivery month, and yet we've already seen in silver almost 7,000 contracts stand for delivery. About pretty damn close to 35 million ounces of silver has already been delivered in January. So between December and January, you have 100 million ounces of silver that has stood for delivery. Now there's still another 2 weeks left in the January contract, but this has been going on every single month. And I've been screaming about it on a central bank level since 2020. You go back and watch any of the 6,000 videos I did in that time frame, and you will see this has been a primary thesis of mine, that when the most well-funded and well-informed traders on the planet take possession and remove counterparty risk, stand for delivery at these kinds of numbers, which We've never seen this before on COMEX. Never. And where is the mainstream media with any journalistic integrity at all? Where is the idiot Jim Cramer? Where are all of these people who are supposedly doing what's right by the people that they're talking to, and instead they're leading them like the sheep to slaughter? This, to me, is all you need to know. Yes, on top of it, the United States government classified silver a critical mineral. Geez, do you think the U.S. government could maybe be taking possession of 100 million ounces of silver? I don't know. Sure seems that way to me. And forget about the fact that the European Union did it a year ago, and forget about the fact that China, everyone talks about them tightening the noose on exports. Well, what people don't really talk about is what they said in November, which is that we are prioritizing silver for domestic needs before anything else. Then they put on the export restrictions, and they're responsible for refining 70% of the world's silver doré. Yeah, things are getting very interesting. But in terms of the noise and the periphery, what else do you need to know? But that the biggest money in the world who knows the information actually probably creates the information, or is real close with those that do, says, yeah, let's stand for possession every month of billions and billions and billions. And shh, don't tell anyone. I have to look over my back and make sure, I don't got someone looking to stab a knife in my shoulder, because I've been saying this for months on end now, and, it's happening, and it's accelerating. December was the biggest delivery ever in silver, ever, for a month of December in the history of the COMEX market, which goes back to 1974. So, wow. I don't know, man. Things are starting to get crazy.
Yeah, so I'm curious obviously there's many reasons why, but is this like a signal of the global economy cracking, the dollar, losing significant value with the de-dollarization and such? Just curious, and why are these, big institutions? Obviously we've had the central banks, and we've covered them buying because of sanctions and the dollar being weaponized and such. But now you have bigger institutions, or even wealthy investors that are demanding delivery of that metal. Just curious in the why.
Well, I think that's fine, and you're right. All of those things matter. The U.S. moving silver into the critical minerals list, and putting frame silver as a national security issue, not a collectible metal issue. What you basically have is a situation where the paper price and the physical reality are on a collision course. And central banks, as you mentioned, have been buying largely because of no counterparty risk. And the fact that it has outperformed, both gold and silver have outperformed just about everything. Gold, going back 25 years, has doubled the 10-year treasury, has no counterparty risk. Look at it over the last few years. 2 years ago, gold up 45%, the 10-year treasury up 4.5%. That's 10 times a gain, no counterparty risk. Last year, gold up 80%, the 10-year treasury up 4. That's 20 times, no counterparty risk. Look at it, look at where we are at silver. Silver up 150%, 10-year treasury up 4. I think what you are seeing is the fact that it's an issue of trust. People don't trust. Not only do they not trust really the institutions that are issuing the treasuries and the government standing behind it, who, to your point, can sanction, but it's also a lack of trust, I think, in the markets. And, I think in essence what you are seeing is the fact that these entities who understand where this is all going would rather have the real physical metal instead of paper promises. And I think that is really what it's all about, is that we're moving away from a system that, look, we stood on a moral high ground after World War II. We were the beacon of truth and honesty across the globe. And I think that is being questioned on every level, not just what's happening geopolitically, but it's with our institutions, our markets, those that run the markets, our everything, our judicial system, our Federal Reserve. Look what's happening right now at the Federal Reserve. And, it's interesting because as an aside, the spokesman for Goldman Sachs said that if the market suspects that the Fed loses independence, gold will go to the moon. Well, what independence? Who's Stephen Mirren? Stephen Mirren is the architect of the Mar-a-Lago Accord, who was Trump's advisor, who filled the first vacated spot of the Fed several months ago. And so what you are witnessing is the world saying, we don't really trust their markets. We don't like how they go around the world and imposing these types of military supported missions. Like, I was listening to Gerald Celente the other night, and he says, can you imagine if Putin went in to Kiev and took Zelensky and his wife? Oh my God, the outrage. Or Xi did it in Taiwan. Took the president and his wife for whatever reason. Yes, the guy's a narco and whatever. But the point of it is that, we invaded Iraq 22 years ago looking for weapons of mass destruction. Didn't find any, destroyed the country, toppled the regime, and guess what? We're still there. And I think that the world is getting tired of it. And so, there is, I think, evidence that the physical market is starting to overrule the paper market. And when that dam breaks, I think the move isn't polite. And this is all about trust or lack thereof.
Yeah, I like how you bring this back to trust. I mean, I just started writing down 5 major themes that have happened in the last, let's say, 3 weeks. One, we had the waste, fraud, abuse, situation in Minnesota. You got civil unrest from the recent incidents with ICE. You got the investigation into the Fed, right? You got Maduro, the president, whether legitimate or not, extracted from a sovereign country. And now you have talks of Iran, Cuba, and Greenland. And so, it does seem like there's the trust is eroding very fast when people are seeing things like this happening, and they're like, hey, we need to protect ourselves. And so that's kind of what I'm getting from that.
Yeah, 100%. And when you see these kind of deliveries instead of paper promises, when you see countries standing to change the rules by implementing strategic minerals lists or tightening exports, this is becoming real very quickly. When we started the year 2025, silver went from the mid 20s, low 30s early in the year to upper 70s by year end, and now we're trading at almost 90. This is not, and as far as I'm concerned, this isn't just a gradual rise in the price of silver. This is silver repricing, and gold repricing, which doubled. And I think these things are beginning to happen, and it's because that there has been, for many years, central bank suppression on both gold and silver in the West. Silver for the military-industrial complex, and gold because of Gibson's paradox, the inverse relationship between real interest rates and gold. So they had a vested interest, they being the Western elite, the central banks, in holding these things down. What makes things very different now than at any time I've ever done this is the ability to stand for delivery. And the countries that are doing so prior to whoever's doing it here in the U.S., these were, I think countries that for many years were not sophisticated or coordinated or motivated or had any interest in challenging the West. And they're doing it now by standing for delivery, which is a completely legal thing to do. And when you have exchanges that rehypothecate, in other words, sell the same contract over and over and over again, creating tons of volume and extra cash and the ability to, in essence, fleece the market because no one stands for delivery, it's easy to do. But when everyone says, here's the vulnerability in the entire system and it's about standing for delivery, it's like Bernie Madoff. Everyone was happy with Bernie making big monthly checks until they said, but we want our principal back. And then the whole thing fell apart. Well, it's the same thing here. It's the vulnerability to the Western system that has been exposed by countries that are coordinated and motivated and wealthy and sophisticated that were third world 20 years ago. Now they're not. And this is creating a very, very big problem anyone foolish enough to be naked short in this market, I think, deserves what they get. And I honestly believe that we will find that out sooner than later, as some of these banks are hemorrhaging. And there's a report out of the Economic Times that says it's the U.S. banks that are long, and that and they have quietly flip-flopped, leaving the European banks and maybe a bank or two in Canada naked, exposed to what could be an existential threat in the rise of metals prices. And anyone that doesn't think that's possible, I would urge them to watch the YouTube video that was done between Bart Chilton and Andrew Maguire, and the same thing between Bart Chilton and Chris Marcus, Arcadia Economics, when he spoke of Bear Stearns going bankrupt largely because of them being on the wrong side of the largest paper short in the world. And it went against them from 9 to 21. And that is one of the craziest interviews I've ever seen in my career. I think it's one of the one or two biggest, most important interviews you can ever watch. If you own metals, you're on the wrong side of this trade to the level that these Western banks are. And it is an existential threat when prices are moving the way they are because of standing delivery requests by not only, whoever's doing it here in the States, very sophisticated money, but also the central banks around the globe.
Mm-hmm. Got it.
George and his team, a 16-year VRIC employee building some of the largest mining operations on the planet. We started a drill campaign, from the drill campaign moving into a full engineering report and study. We came out with our pre-feasibility study in 2021, and it showed a really impressive economic case for advancing the project. We'll have final definitive feasibility out in December of this year. So in the space of 4 years, fully engineered, fully permitted. US Gold Corp is a near-term, low-cost gold producer in Wyoming. To learn more, go to usgoldcorp.com.
A couple of things I'm curious in your perspective on. So, obviously people are buying metals because of the loss of confidence and the loss of trust, which is very different than those that are buying metals for the industrial demand. And I'm just curious in your perspective on the weight of both of those. I mean, because it seems like the loss of confidence would drive a lot more buyers into these markets. And I think that, I don't know your assessment of like the public, the American public, or, the average Joe and Jane in their buying of the metals. But, if there's a confidence issue, I'm sure they would come screaming. And I've seen some videos of like some lines super long outside of like metals dealers and people wanting to buy metals in other countries. But, just curious in your take on the loss of confidence versus that industrial demand.
Well, I think the public will be last to the party. The industrial demand, I think, will come to some sort of a very large battle with the big funds, the big money that's doing it from an investment standpoint. Who will have a very hard time ignoring the gains that we're seeing in these markets that are blowing through all, resistance levels and have outperformed everything. So at some point, ask yourself who stood for delivery for 38 million ounces in the last week on COMEX, and who stood for delivery for almost 70 million ounces last month. And is it the federal government? Is it Tesla, Samsung? We already heard how Samsung's gone to Mexico and dealt directly with a mine by buying doré concentrate. But that's the same thing I've been saying for 2 years now that China's been doing, as I was told by Sean Kuhn, a mutual friend of ours, the CEO of Dolly Varden, and Keith Neumeyer talks about it, how how China is going directly to Mexico, the number one producer, China's two, and to Peru, the number three producer, and buying all their pre-refined silver in the form of doré concentrate, paying double what the West will, shipping it back to China to refine it. Well, that's the exact same thing that Samsung is now doing. So you're seeing a situation where at some point the industrials who have to stockpile say, my God, it's going so fast and now everyone's going to buy it. If we don't jump in and take millions of ounces, we could be in big trouble. So you will see the industrials battle I believe, the hedge funds at some point and push the price massively higher. At the same time, now you have the governments involved as a critical mineral and limiting exports. And there are very few commodities that have plurality in use, right? Like you have monetary, you have military, you have industrial, and many forms of industrial. And you have all the players in that game that are all saying, well, geez, I need it. And now you have the U.S. government amongst the European Union and now China, the real big boys and girls in the room who are saying, but we need it too. And so between the industrials, the governments, the investors, and then the retail investors who will get the scraps into a depleting pool of availability, where we're now 6 years in a row in a structural imbalance between supply and demand. Only about, 18% of what was mined last year, of the 800 million ounces, only about 160 million of the 800 million came from companies mining silver. That's it. The rest of it, and less than that, comes from byproduct mining of copper, lead, and zinc. And so, yeah, it's becoming something where demand is massively increasing, hasn't hit the mainstream yet for the retail public, but it's being driven by the highest money in the world at a period of time when we're going deeper and deeper and deeper into an imbalance between supply and demand. And it's coming out of the ground at 7-to-1. In other words, 7 ounces of silver for every 1 ounce of gold, yet it's still priced at upper 50s, 56-to-1, but it was at 120-to-1 in March of 2020. It was at 85 or 90-to-1 most of the last several years. So it's beginning to move back towards not only its historical ratio, and everything always does regress to the mean, regress to the average. How low does it go? Don't know. But if you told me that it would regress into 30-ish-to-1 or 20-ish-to-1, I mean, that's totally logical and still many times higher than it's being pulled out of the ground at and depleting, disappearing. So you look at all the silver used in military applications and industrial applications, and the military applications have blown up, and the industrial applications, because such a small amount is used, most of it doesn't get recycled. It's in landfills. So it's depleting, it's disappearing, it has multiple uses, and now being challenged by sovereign nations. It's, I think, the buy of a generation.
Yeah, for sure. So a couple things. So obviously, you have these competing forces for, scarce metals, right? And some folks are buying this. Some institutions may be buying this for investment purposes, but some people are buying it because they're like, okay, I need to protect my capital. I need insurance. So if we look at, the trajectory, right now there's some narratives that the Trump administration and the Fed are going at it over interest rates and such, and interest rates being high and having higher borrowing costs makes it challenging to do certain things that the government wants to do. Then there's also a lot of talk about QE, being set up for QE to start again, so the expansion of the money supply. But there also looks like there's a battle to keep like the U.S. hegemony intact, and this is like very different than like the 70s, where we had a lower debt to GDP, we had lower debt, lower deficits and such, and so now we're like at this point where it seems like people are trying to protect their capital, and the Eastern retail folks, I mean, they get this. Like, they've been getting this for like centuries, right? It's like the folks in the West are like more financialized and such, and we're used to these, other assets not owning and holding real wealth. And so, just curious in your perspective on that, the protection of your capital.
I mean, that's exactly what it is. The dollar that we think is a good store of value is more like a melting ice cube. And what gold and silver are amazing stores of value. I can show you some numbers very easily. But, we're first of all, we're told that the dollar was only down 9 or 10% against the dollar index, but that's a very poor measurement because of Triffin's dilemma, which says that countries will always need, you'll run a trade imbalance always if you're the world reserve currency, because countries need to sell their currency to buy ours in the open market. We don't provide them enough dollars through trade alone. They're constantly devaluing their currency against ours, so we're measuring the value of our currency against a basket of crappy currencies that continually devalue against ours. It's a poor measuring stick. Look at gold and silver, and you'll see that the dollar was down 150% against silver and 75 or 80 against gold. But I'm going to give you a good analogy or a good example of what I was talking about. So I'm just going to use my phone here. I'm going to put my glasses on so I can see. Maybe jot these numbers down for me, Darrell.
Yeah, I got you.
So here is the average house price in 2025. The average house price in 2025 is $530,000, okay? The average house price in 2005, 20 years ago, was $232,500. And then if you look at what was the average gold price in 2005, write this down, $445 an ounce. And today, price of gold is what? $4,600. So, okay, let's do the math. So what was the average price of a house in 2005?
I was at 232,000.
And what was gold?
445.
All right, so 232 divided by 445 is 521 ounces. So 20 years ago, you're saying to your wife, should we spend the 520 ounces that my grandfather left us and we'll have no debt? We can buy this house outright. It doesn't pay any interest. Or I guess we could stick it under our mattress and earn nothing but dust for 25 years if that's what we really want to do. The mortgage will almost be over by then. We'll own the house free and clear, and hopefully gold goes higher. And you guys decide, yeah, let's do it. So we look at the price of a house today, which has almost doubled in dollar terms. Is that correct?
Yeah, we're at about 535K.
So it's doubled, 232 to so great. You doubled your money and you got your gold. Sounds good, right? Well, it is good because if we take a look at not selling that gold, and what I'm getting at here is that anything that you value as an asset price in dollars looks like it's going way up. It's doubled, over doubled. Measure it in gold and the prices are collapsing because what are 521 ounces of gold worth today times 4,600? You're at almost $2.4 million, which buys you 5 houses at today's prices. 5. And that didn't earn any interest. So what gold is a way to maintain your purchasing power and in some cases accentuate it. Now you can take any asset you can think of and do this with. Go back to 1971 and you'll even see since we left the gold standard that all asset prices are deflating against gold and massively inflating against a falling dollar. So in other words, gold didn't go higher, the dollar just keeps falling. And that's built into the system and it's accelerating. So yes, you own gold not to become wealthy, but because it is wealth that has outlasted 2 world wars and German hyperinflation and the Great Depression and every pandemic and everything. Mentioned cumulatively 700 times or more in the Bible, and here we are 6,000 years later, and what do you know? Things have come they have come full circle, and the most well-informed traders in the world are rushing to accumulate it and repatriate it and take possession of it quietly that no one really sees.
Mm-hmm. Yeah, for sure. Yeah, I've been doing the numbers on the S&P to gold ratio. Speaking of, we live in a very financialized, where many retail investors have money parked in the 401ks or whatnot, which are typically in these major indices, and you just continue to see the S&P hit all-time highs measured in dollars, but it's just rolling over in gold. It hasn't even hit all-time high. I think the last time was in the 2000s during the dot-com bubble, and then it made a lower high, and then it's rolling over again currently. And so I think there's a lot more movement upwards.
I would agree. I don't think we've even begun to see anything yet, and I think that's by design. I think rising gold devalues the dollar, and that's what they're trying to do. You don't devalue the other currencies around you or devalue the dollar against other currencies. They'll just keep devaluing theirs. That's what Triffin's dilemma is all about. But you let gold go higher, which is the true barometer of the health or the measurement of a currency, and you see the dollar will start to devalue more and more and more. And that's, I think, what they will do. I think saving in dollars, you're destined to go broke. Rick Rule, our mutual friend, says this all the time. If you are not a contrarian, you'll be a victim. And I think that's what he's getting at, is that holding your wealth in dollars is really, like I said before, akin to holding a melting ice cube. It is not a good store of value whatsoever. And you can see that. You can see that just by doing exercises just like this to see in gold terms any asset you can think of is going down in price. And it's deflating against real money. And that's the whole reason to have a gold standard, is that you have stable prices, or even that deflate. In other words, a better standard of living, right? If prices are going down and, but instead prices keep going up, which makes wealthy wealthier, right? This is the whole concept of those closest to the gold or to the money spigot become wealthy disproportionately to those that aren't, because those people who have assets and can buy more assets, their value goes way up. And you contrast it with the people who don't. By the time the money gets down, filtered down into the public who don't have assets, just trying to make ends meet, it manifests in the form of higher inflation, higher costs of living. And that means the wealthy whose assets are inflating become exponentially more wealthy, and the people who don't have assets, just trying to keep it all together, well, they're having a harder time doing it. It's the K-shaped economy, and that's where we're going. And you can see it very easily if you take a look at this type of measurement.
Yeah, definitely. So just curious in your perspective on gold, silver, platinum, palladium for 2026. I mean, obviously, they're still screaming higher. Folks that haven't gotten in may feel like they missed the boat, or that these prices are too high if they look at a yearly chart or whatnot and they see how much they performed over the year. Just how should people be thinking about this, and where do you see these metals heading over the year?
I don't think it's too late at all. But at the same point, I think that a little bit of caution is not bad idea either. And especially after a move like we've just seen, and the old adage, when everyone starts talking about something as a certainty, that's usually when the market reminds you it's smarter than you and it doesn't care about your conviction. But I would separate price risk from thesis risk. In the short term, yes, silver and gold can absolutely pull back, and silver's a thin market. And after a vertical move, you can often see what's called a sharp air pocket, where profit taking comes in. You can see the margin pressure that the CME group keeps raising margins to knock people off on margin. People standing for delivery right now are not using margin, so all it does is give them more metal at lower prices. You'll see headline risk that it's overbought, et cetera. And you'll see corrections, sharp ones, in 10 or $20 in silver, $100 in gold. Gold's up $100 today. Why is no one complaining? If it goes down 100, they'll all freak out. But this is normal in a bull market. It is the underlying conditions, however, that got us here, and that's tight physical availability coupled with massive delivery demand in a paper market that has been asked to settle real-world demand in real metal that it may not actually have. So yes, Darrell, if you're asking me, could we see gold and silver drop next week? Of course. I'd actually be surprised if we didn't get some violent pullbacks along the way. But if you're asking me, does a pullback change the bigger picture? Hell no. In fact, I think it's a gift. Why? In a market like this, why? Not because I'm trying to sell people the products that we sell, but because these moves are usually driven by positioning and by leverage, not by a sudden surplus of available gold and silver. So if you're a trader, trade. But if you're trying to protect your purchasing power, the risk isn't that silver goes from 80 to 70 for a minute, or gold goes from 46 to 44 or 4,000. The risk is waking up in a market where you can't get what you want at any reasonable premium or price, and the price you thought you'd be able to buy it at is gone. So short-term caution, sure. Long-term conviction, absolutely. And in my opinion, both can be true at the same time.
Yeah. What if someone's starting at zero? Should they be focused on getting off zero? I mean, I think my nephew the other day, he bought his first gram of gold, and so he was excited and such, but he was at zero, right? And so it's like, okay, all right, nephew, let me walk you through how to buy it, blah blah blah. A lot of people are at zero, and so I don't know if they should be worried about, could we get a price drop, at this point, because every risk as of why people are buying the gold, why the institutions are buying the gold, why the central banks are buying the gold, none of those risks has been alleviated. And like I mentioned earlier, this is different than the 70s. The 70s, like our debt to GDP was way lower. we could still come out as a global hegemon, especially, interest rates were high, central banks started dumping their gold for bonds, right? Do I see that happening in any time in the near future or whatnot? No, like I think the risks are still there. And so if you're at zero, I think that people should be, considering that and, purchasing regardless of where the price is today.
Absolutely. And you're that cool uncle, huh? Everyone's got a cool uncle, but yeah, I mean, I think saving your bigger threat is saving your money in dollars, and we all have the ability to save. When I started this company, I tell this story all the time. I was 19 years old with my father, and he told me the only rule would be to buy something every 2 weeks. I don't care if it's 1 ounce of silver, he would say to me. Of course, when I started this company, silver was $4 an ounce, so it was a lot easier to do that back then. In the 90s, early 90s, $3-4 an ounce, I remember. But even still, 1 ounce of silver every 2 weeks, you'll be surprised what the laws of compounding do. I mean, it's like if you work out to get in shape, you don't go really hard for 1 week and think it's done. You go on a religious, methodical schedule. The same thing is true about paying yourself first and getting ahead. And you don't have to do everything all at once, but you have to start. Every journey starts with the first step. Get as metaphorical as you want, but absolutely. And it teaches you, how to pay yourself first. I don't know about you, Darrell, but you're not 17 anymore, but how fast did it take to get from 17 to where you are? I'm 55. It feels like I'm still 19. Like, how the hell did that happen? And time catches up with us all. So you wake up one day and say, man, I should have saved. Well, it's not. I mean, your nephew has time on his side. Yes, the market has moved much higher, but so what? Find a way. If you have a job, you can probably find a way to spend $80 every 2 weeks. So, what does that amount to? What's that? $5 a day, kind of? $6 a day? I'm not trying to be less than empathetic. I mean, not everyone is in the same financial position, but if you don't prioritize your future self, time catches up with us all. And so by paying yourself first, by forcing yourself to save, and look, let's be honest, selling gold and silver is very easy, but it's not as easy as pushing a button, not as easy as giving a Visa card or using your Apple Pay. So it lends itself to savings. And I don't know, I think that being at zero right now is a bigger threat to me than being overweight. I don't know how you would be overweight in gold and silver right now unless it represented everything you owned. But even still, I'd rather take that position than having everything I own in U.S. dollars, which have much bigger problems inherently, I think, than does a position in gold and silver, which has been wealth for 6,000 years.
Yeah. I mean, I could confidently say probably the majority of people, at least in the West, they can buy a silver dime. They can buy a Roosevelt dime. They can buy a gold back, right? And so I think that, it may cause some sacrifices. Maybe you sacrifice the Netflix subscription for a month or whatever the case may be, right? But I think that folks can get off zero.
Well, a silver dime right now is worth about $5 or so melt value. That's a good point. So yeah, you could. And you can. That's how you start. And by the time you get to be 55 years old, well, holy crap, look at all that you put away every single 2 weeks. For 2 weeks, there's 52 weeks in a year, so you're making 25, 26 purchases a year, and over time, that adds up.
Yeah, for sure. And, I'm thinking of, like, longer term, time horizons, like you mentioned, like, in the early 2000s, silver was $3-4 an ounce. So for me, like, even though I've been stacking since about 2020, I'm looking at, okay, 20 years from now, where's silver at? Especially with the amount of debt deficits and such that we see around us, the amount of into money supply that is being created, interest rates dropping, QE. If we have another crisis, the floodgates come open with QE and such. And so, I think that 20 years from now, the prices could be significantly higher than where they are today. And so
the prices of everything in dollar terms will be.
Yeah, exactly.
That's the whole reason you do it. And it's not to get wealthy. Is because it is wealth. I would much rather hold my money in gold and silver than in the dollar, which again, using this analogy, sorry to use it now 3 times, is a melting ice cube. It is. And its value continues to massively decrease every single year in terms of its purchasing power. And, you know, I don't know. I mean, this has been going on really since 1913, where the dollar has lost 97% of its value in purchasing power since the establishment of the Federal Reserve. So this is why we hold gold and silver. This is why the central banks are buying it hand over fist. This is why the most connected, well-informed money on the planet's doing it here for the last 15 months. They know something's coming, and they know holding your money in dollars is not the place to be, or treasuries. So yes, I think gold and silver are being rewritten into what is, you know, maybe a new monetary system, and realizing that silver is critical for a country that wants to remain relevant in things like high-tech military and AI and solar panels and digital electronic ecosystem. You need it. And if you don't have it, and you're reliant upon countries that are in essence your foe, even friendly foe, you're at a disadvantage. And that's what's being realized right now.
Yeah, for sure. Well, Andy, appreciate you for coming on the show. Looking forward to seeing you at VRIC, the Vancouver Research
First beer's on me, buddy. First beer's on me. And let's do it for sure.
We're going to make this happen for real. I'm going to text you and be like, hey, Andy, meet me at the bar.
And we can even do, you know, any type of a impromptu, you know, a lot more informal conversation if you want to do something and get a show out there or whatever. I look forward to it, and I will be there. You know, I really do love going there, and I prove that by flying from, you know, Palm Beach Airport all the way to Vancouver. It is a long day. You're flying from one end of North America to the other, but I wouldn't miss it for the world. Jay does an amazing show. I can't wait to see you, and I would tell anyone who wants to go to one of the 2 best shows I go to all year, every year. It's the Vancouver Resource Investment Conference, and it's one that I would not miss. So thanks for having me, man, and I look forward to seeing you in person.
Yeah, appreciate you. And you all, if you haven't subscribed yet, be sure to hit the subscribe button, as well as click the link that's pinned in the comments that is to the Vancouver Resource Investment Conference. You can meet us there in person, or you can live stream it. So thank you for watching, and thank you, Andy, for coming on.
You got it, my man. Stay well.
You too.